45 minutes time frame. So today we have been shopping within the Asian range for the whole day. And yesterday this was my target was 200, right? And the monthly open and this volume imbalance on the monthly time frame, this was the target. So we are at the target and about the previous day's high. So for reference, this is the previous day's high. So let me just unlock it. This point is the previous day high on the electronic trading hours. I am going to mark some important levels which are going to be used by the market for the rest of the day. So these levels are all in all this overall range. This is the range, the high of this wick to the high of the high of this point. This is something which I'll keep an eye on, but this will be on a background and not be prioritized. Send to backwards. The- Coming back to the 15 minutes, this overall range which will be used by the market is going to be used by the market, the high of this point to low of this bar. Now I'm using the 15 minutes time frame. We have 2 minutes till the market is going to open. Just keep this in mind. The previous 15 minutes closed below the previous day's high. This is the wick which is controlling price. We got a closing below this point. We never got a closing below this bar or any of this bar. So overall, the range is contained within this wick. I'm going to see if for the next 1 minute we can stay below this wick, the 815 wick on the 15 minutes. If the price can sustain itself below this point, that's an indication that the price wants to move lower. Let's do some close analysis. Close analysis is something which I do basically to analyze the trend or the probability of moving in one direction over the other. So the previous 4 hours closed above, we closed above, closed above. We never got a closing below the prior bar's wicks low. Now, this is the validating candle, last validating candle, which is holding price. So this is the range I'm talking about. As long as we do not get a closing above or below any of the prior bar low on the 4 hours, I'm not considering taking a short. I'm not considering taking a short. Coming back a step down to the hourly, this is a very classic ranging conditions. We closed below, closed above, closed below, closed above. So overall, this is the point. This candle is the dealing range, right? So on 4 hours, we are in an uptrend. On the hourly, we are ranging. Okay. Now within the range, this was the price which I was looking at 815. We never got a closing below that level. The market is open. There are some key things I'm going to explain and give some reference points. This blue box is the opening range gap. I'm going to drag it till 11 o'clock. 11 o'clock just to the 18th bar of the day. Let's see the first 5 minutes will get a closing below the prior day high or not. Keep this, keeping an eye on this. So what really important, that thing that happened yesterday was we got a closing above this price point on the regular trading hours. The this price point, which is 516.59. If I go to the hourly time frame, that was the whole criteria that we need to get a closing above this price. Once we got a closing above, we started to move higher and higher and higher. So it can just come back down. I don't care. I don't care. Once it comes to this point, I'll try to buy this. So as this is what I'm using as a reference point for the swing longs. As long as we are above this price point, I'm not interested in taking a swing short. But right now I am doing scalping. So just keep this context in mind. 15 minutes and 5 minutes. We are above the moving average, which is always in long. For this context of the first leg, second leg, probably the third leg. This price, which is 564.96, is the open of the month, the monthly gap. So we have a lot of confluences. We retested the previous day high. We are bouncing off of the previous day high. I'm keeping an eye on this price overall. We can use this as support and move further up. The low of this box is 23,166. The high of this box is 234 overall. If we fall below this point within the first 15 minutes, that will indicate that bears are trying to take control. We might get some sort of a retracement back to the channel lows. If I go to the hourly, we have 25 minutes till the first hour is going to close. So you can see that this is some sort of a wedge. So first push, the second push, this third push, making an expanding triangle on the hourly. So my setup will present itself once the first 15 minutes will close. I'll try to take a breakout of the first 15 minutes. The first bar is a strong bearish bar. The first bar is about to close on the 5 minutes. It's a strong bearish bar. We came very close to 187, which is the gap on the hourly. We do not have a gap. This is a balanced price range. This is where the gap is. And that's the gap. First is a strong bearish bar. But still, it's always in long. I'm not in trying to take a short as long as we are above the moving average. So the first push, second push, the third push. So it's basically an expanding triangle. We can just move further up. That can also happen. So we are retesting the monthly volume imbalance or the monthly close on the electronic trading hours. We are still above the previous day high. We have 8 minutes left till the first 15 minutes close, and still this is more bullish than it's bearish. So just keep this in mind. Whatever, if for example it makes an impulse move downwards on the hourly time frame, it's what this is the second leg, first leg, second leg. And on the hourly time frame, what is it? It's a range on the hourly time. It's a typical range. We closed above. So any second leg should not, or the third leg should not be traded, or not the second leg in the trading ranges. The market loves to track the second leg traders on in the trading ranges. So this is a second leg. First leg, second leg trap, back to the monthly open. We're trying to move back up from this point. See, now what I want to see is the candle move above this point, 223. 223 would indicate that price is not trying to close below the 15-minute prior bar low. That indicates a strength. That indicates what? It indicates strength. Yeah. Hello, Eric. So the market is refusing to go below the prior bar low, nor to give a closing below on the 15 minutes. On the 5 minutes, big down, big up. Still, the second candle of the day is an inside candle. Let's see if it stays inside the candle or if it moves above the first bar of the day. So, you remember what I said about this black box? This is a negative space. See, market is like tried to move to this point in the depth of this black box, but refused. The second bar is a strong bull bar. Second bar. After this bar, I'll be allowed to take a trade, but with the condition that this should not be a doji candle. This should not be a doji candle. 36 seconds left till the first bar is going, a second bar is going to close. Last 5 minutes candle till the first 15 minutes will close. I want to see this candle close at its high. This candle is still more bullish than it's bearish because overall, if I measure this candle, we are very far above the 50%. We are basically in the 30% range. We are trying to make new highs on the 15 minutes. We are very close to like 10 points and it will make a new high. So this will be a very bullish candle. We're trying to make a new high. I think the bulls who bought this close, this was somewhat of a reasonable buy. They are trapped. Who bought this close, they probably have bought some more here. For example, if someone bought this close, they bought some here, they'll get out a break even with some profit right around this point. This is how it looks on the 1 minute time frame. The blue line is, and this previous day high is reacting good. This is too distracting. Okay, let's come back to the 15 minutes. We have 2 minutes till the first 15 minutes will close. I will just front run to draw the range. Right. That's the 15 minutes range. Now what I'm trying to do is I'll try to take a scalp out of the first 15 minutes range, breakout of the initial range, aiming for half of the range, basically aiming for 30 points, risking 30 points. That's the setup. It's not unreasonable to expect 30 points in the direction of long because the trend is already long. I am treating this as a range, but still I'm more biased towards long side. So if I am expecting a range, I'll just get out early. But bias is still the same. Last minutes, 25 seconds. So if it breaks towards the upside, I'll try to go long, aiming for 30 points. If it breaks towards the downside, I'm not going short. That's the whole criteria. But it's still because if I were to go short below this monthly volume imbalance, that's risky short. I don't want to indulge. We have PMI numbers. Just okay. One coming to the 1 minute, right? I'll try to go long above this high. Okay. This is the setup. I need 30 seconds above, basically to close 1 minute candle to close above this high. That would be good. Long position. I'll buy the pullback, aiming for 30 points, risking about 29 to 1 risk to reward. Nice. I'll enter the full position at pullback. If it reaches 31 points, I'm just okay with single lot. Same. This and this, both boxes are the same. So on the Qs, this equals to 1 to what would be equal to right around this point. And suppose if someone got the close of the second bar, I would take a single standard deviation of the second bar. That will be equal to this point. So aiming for 1 to 1 is highly probable I'll get it. So what was the real risk on this trade? It was there wasn't real risk. Basically, this was 29 points. I never got into drawdown. It's like there are two conditions whenever the market breaks this range. The first criteria is it needs to break. That fills me with what, with a limit order, right? The other, I need a closing. So I divide my position into twos. So I got my target. I'm getting out. Okay. So I enter half of my position as the bar breaks. I'll enter rest of the position if we retest this point with a limit order. So first is the stop order, second is a limit order. So I think this is good enough, right? So okay, guys. Thanks. If someone's watching, thanks for watching.